Good afternoon, everyone, and welcome to our first live webinar of 2024. I'd like to thank you all for taking some time to join us today, and I'm very pleased to have the founder and CEO of Reventon joining us today.
Hello, everybody, and thank you very much for joining us. What a beautiful day it is here in Melbourne. Very excited to be doing our first presentation for 2024, talking about some market insights, adding some great value to our clients and our prospective clients.
Recording in progress.
And putting a great offer at the end of it where you can meet one of our team to go through your individual circumstances also.
So it's a cracking day here in Melbourne, Chris. It's our first webinar of a series of events that we're going to do over the course of this year. I believe we'll be hosting some webinars and also some live events over the course of the year. So I'm looking forward to being able to connect with some of the audience at our live events, but definitely looking forward to having a chat to some of our clients just in relation to, I suppose, what we're hoping to see in the market into 2024. And also just discuss some of the success stories that we've had as well. So just a quick overview of what we're going to be running through today. So the webinar will run for approximately 30 minutes. We're going to go through a few client case stories. We'll also go through a review of some success stories over the course of the last decade as well. We'll talk a little bit about our population here in Australia and the population growth over the course of the next couple of decades as well. And we'll also talk about areas that we have a strong focus on to invest in 2024 as well. And in saying that, Chris, obviously areas that we talk about for clients to invest in, that may vary depending on different clients' circumstances, their capacity to be able to borrow, and things like that as well. So
risk tolerances, different things that they might look at, which is why we encourage strongly to do that discovery session where we can unearth all these things and have a great idea of the client's financial position and how they can move forward. So something that I'm going to do this slide, something that obviously that we're very, very proud of. Myself and Zen have been in the industry for a collective 50 years, which is something that we are very, very proud of. As I've mentioned, we've helped over 5,000 investors get into the property market, over 350 five-star reviews. And another key thing at Reventon is we care, we do our philanthropy. So we do a lot for the St. Vincent de Paul's, and we've raised just shy of $700,000. For every property purchase, we donate money as well to St. Vincent de Paul's, and it's something that at Reventon we hold very, very high.
Fantastic. Thanks for that, Chris. Well, we will talk a little bit about what we've done in the past decade.
Here's some of our success stories across different areas of Australia.
Okay, so I've lifted some of our clients' case studies, Chris. Talk about what we've done over the course of the last decade. We can also talk about some of the successes and the reasons to why we've sort of looked into those regions as well. So obviously with the support of a number of different research organizations, Hotspotting being one of them, SQM, CoreLogic, a number of different data and statistics that we take, and some real emphasis on the reasons to why we look to put clients in these different areas. So if we go back to 2015, we're doing a lot of property sales in the greater region of Melbourne. So 40, 60 minutes out of Melbourne's CBD. So we'll talk a little bit about an area called Officer. We were purchasing properties for our clients at around about that $365,000 mark. Today, the current value of that investment, Chris, is just short of $650,000. So fantastic uplift over 8 years, considering the median house growth in the past decade. To be able to receive 75% over the course of the last 8 years, I think it's a fantastic success story. So having an uplift of 75%, big win for our clients and big win for our organisation as well.
100%. Now, leading into the next area, which is regional Victoria, which is in Armstrong Creek. Over the last 8 years, the property was purchased in October 2015. The uplift was 57%. Purchase price was $422,000. That represents just shy of $250,000 in capital growth. And as you mentioned before, having these sort of figures and great entry points in the market, it allows our clients to use that equity and to successfully buy another property and to keep building their property portfolio. Again, in regional Victoria, Zen?
We looked into an area Ballarat.
Yep.
So around the Sebastopol area. So again, probably about an hour and 20 minutes out of Melbourne's CBD. Obviously, rail links from those regional areas into Melbourne have been fantastic, and has again supported the growth of that development as well. So we were looking at properties back in 2017 for approximately $330,000. We saw obviously a great opportunity for some short, mid, and long-term growth. So we talk about properties performing quite well over the short term, mid-term, and the long term, and Sebastopol was one of those success stories. Client received just under 50% growth over a 6-year period, so $160,000 growth on a $330,000 property, which again was another success for our organisation and for our clients that looked into that Ballarat region as well.
Of course. Now, obviously, looking at our Reventon formula and some of our methodology, you mentioned we use other data sources as well, but we do our own research as well, of course. We use other data sources. And one of our key philosophies, which is invest where we invest as well, which we're going to share with you a little bit later, we use all 3 areas to make sure that we can identify these properties Australia-wide. So here we go into Queensland now, which is in Toowoomba. In Toowoomba in Queensland, purchased January 2020, so about 4 years ago. This property's seen just shy of a 30% uplift, which represents from a purchase price of 505, growth of 145,000, which is enough equity, providing the client has the serviceability to get back into the property market. So here's 4 great examples by using the Reventon formula and all of our research, our independent research. Well, here's some great success stories for our clients.
And Chris, just to follow up on that, as we talk about investing nationally, in the past couple of years, we have had a strong focus on some interstate properties as well. So moving into those, into the region of South Australia, into northern Adelaide. We've obviously seen some fantastic uplift in the North Adelaide area when we started investing in there, generally around 2021, the start of 2021 was when we first started putting some of our clients into that area. They've already seen upwards of $100,000 in growth in those areas. And in the past 18 months, also looking into areas such as far north Queensland, the Townsville areas, into Western Australia as well, where there's been significant infrastructure into those regions as well, which has also allowed our clients to see some substantial growth in that short period of time as well. So we talk about short, mid, and long-term growth. If we look at properties over the course of the last 2 to 3 years, where we've been talking to our clients about, seeing those properties grow upwards of $100,000 in a short period of time, so over 12 to 24 months, is a fantastic result for our clients, and also a great opportunity for them to then be able to say, okay, I'm looking to build my property portfolio. I can now draw some equity from that and continue on my property journey as well. And I suppose become part of a small percentage of Australians that own multiple investments as well. So something that we're really proud of here is that a number of our clients have been able to get into that small percentage of Australian investors as well.
100%. I want to talk about a couple of case studies. Now, these are individual property studies. Here's some case studies now. I remember this client specifically, and it makes me so happy to share her story. She was a single female client working as a nurse who now owns 5 investment properties. So by buying the right investment properties, and I always say the first property is the most important because it's the stepping stone to your second, third, and fourth property, to not over leverage, to use the right finance structures, to find the right locations. Here we display why this was achievable. Now she's had, this is incredible, $678,000 in capital growth in 8 years.
Right.
But more importantly, what her goal was when she came to us to have her mortgage paid out. I can tell you now she's mortgage free on her own home, owns 5 investments, and an uplift of just shy of $700,000. So yeah, very, very proud to share that story.
It was a great case study, Chris. And also to let you know, when I joined the organisation, I obviously met a few of these clients as well. I was on the phone to that client only a couple of weeks ago as I was heading home, and the praise that she had for the organisation, the praise that she had for the consultants that she was dealing with was phenomenal. So it's great to see how thankful and how appreciative these clients were. And again, helping someone build almost $250,000 in equity over a short period of time is a great result to and a testament to the organisation, the data and the research that we
Now, before we go to the next case study, yourself, and you've been in the game for a very long time, close to 25 years as well. And it's very fitting that you're going to share a case study of one of your clients, which was actually a brother and sister.
So family, sort of a family affair here as well, Chris. And again, you talk about the power of, I suppose, merging resources and how a lot of people have been able to do that and build wealth. We're talking about a brother and sister that first came to me back in about 2010, talking about wanting to build a property portfolio, hoping that they were able to build some wealth, maybe realize the dream of owning their own home whilst running a business. So they opened up a business. So we had to obviously talk to them about, we need some financials through that business. What are we going to do? This formulate a plan. So it was a process. So it took us probably about 18 months to 2 years to get them into their first property. But once we got them into their first property, they were now being able to accumulate 5 properties after purchasing their own business and getting their tax returns and all of their, I suppose, financials in order. Now, the uplift on those 5 properties over $1 million in that period of time, and the total tax saving that they've had collectively is $450,000. So short of $500,000 in total tax saving, which has been a fantastic result for the family as well.
Great win, great example.
And also, as we were speaking about previously, being able to pull resources together speaks volumes, and it also helps you accelerate the journey as well. So I thought that was great that they were able to identify that collectively we can do a little bit more. So what's the plan? And that's the reason to why sitting down with someone, getting a great understanding of what you can and what you can't do, it doesn't necessarily mean that you're going to move on that plan immediately. It might be something that you put a plan in place that you're moving in a 3-month period, in a 6-month period, in a 12-month period. But having that initial conversation is something that's super important.
But to plant that seed to understand what's possible. So going back to all this, it all starts with a conversation to see exactly what you can and can't do. And this is a great example that some people might not think it's possible, but by pulling resources together, which will be unearthed in that discovery session to see what you can and can't do, it's always a phone call or a consultation away, and it's so important to have that meeting. Now, going into the next point, Zen, I know population is super important when it comes to growth.
Yep. Before we do that, Chris, you and I have been doing a lot of talking about what we've been able to help our clients do. Why don't we hear a little bit about what our clients are saying about us? I think that might be helpful for the viewers.
Everybody's friendly, professional, and it's like a second home for me.
That made life so much easier for us, where we didn't have to worry about anything.
We don't know the property market as well. I'd rather, do it right with the help of Reventon than doing a poor job.
The most important aspect for me is to be able to have someone that I trust. That was the reason I invested with Reventon.
They've helped all the way through, and they've been open. They're not trying to push everything on us.
It gives me a lot of happiness, to be honest. It makes me feel like I've got more control over what I'm doing.
I would definitely recommend Reventon to anyone that I come across. This is a very professional company that will help you to grow your wealth and to plan for your future.
Also having the peace of mind that Reventon does everything for me.
It's nice to see them and know that they're actually buying properties as well. So it's not just them trying to push properties onto us.
I'm really excited. I'm very happy to see it. I wouldn't hesitate moving in here myself.
The experience has been nothing but positive, and the good thing is that when I say that I need to be contacted or follow up, they always do that, which is important for me.
From start to finish, it was a set process. If you had a question, if the person you spoke to didn't know it, they'll get the answer for you.
It's not just a sale and then they forget about me. The after-sale service has been wonderful. They always keep me updated, so that's great.
I'm very grateful for everything that Reventon has done for me, and I think I certainly can say a lot of good things about it because the experience is exceptional.
And it's a no-brainer for me.
I don't do this sort of stuff often, preach about other businesses and that. This is something that I thought I need to get out and say, this is a good formula, this works. If you can do it, get out there, give Reventon a call, get them to help you like they've helped us.
Talk a little bit about population and the population overview, and just to give you guys a bit of an understanding to where things are currently at and what the forecasted growth may be as well. So just in relation to the population at the moment in the major cities, so Sydney and Melbourne, the highest population. So in Melbourne, 4.976 at the moment. Forecast for 2040 is 6,699,000. So obviously a huge influx of migration coming into the major cities. Sydney below there is our highest populated major city at 5.260, and we forecast in 2040 6.699 million as well. So also looking at some of our smaller major cities such as Brisbane, Perth, and South Australia as well. So currently in Brisbane, population is 2.192 million, and forecast at 2,942. So big population growth there in Brisbane as well. Into Perth at 2.56, and population to grow to 3.446. And also in Adelaide, 1.4 million with population forecast of 1.7 million. So immigration obviously amplifies population growth, Chris. Some of the leading indicators to why we're looking at specific areas, and migration obviously into a state does have an effect on property prices and how they rise as well. And what we've seen in most of the capital cities is in the past, dwelling approvals in the capital cities are down 23%, which is below the decade's average. So migration up, dwelling approvals down.
Which is putting a lot of pressure on the housing market, which is why you'll see great, strong rental yields, which is super important. We're not building enough houses to house all these people that are coming in through migration and other such things. So it's actually a great opportunity to get into the property market. Now, obviously reflecting back, part of the Reventon formula that we look at as well is an acronym which we have coined as PIDE, which is population, Zen's covered population, and why that's such an important key factor when looking at growth areas and corridors. Infrastructure, showing where the government's going to spend money. Infrastructure creates, our next point, employment. A lot of employment will create more opportunities in the area, which will help the property market go up. But the fourth point now is diversification of employment in that area. This allows the state to be a lot more stable and not just be what we call a one-trick pony. It's dependent on one thing. Whether before we never invested in Perth because it was all dependent on mining, but now Perth has become so much more diverse. So when we're looking at areas, we look at a few key factors we've discussed: the employment, the affordability. Now, we showed a few examples around the 350 mark, which is a lot harder to achieve. So the Reventon formula specifically looks at real estate between the 450 mark to 650 to 700, in that range. Tourism, which again helps strong population growth. Economic growth sectors, population growth, resource and energy. The most important factor when we look at our Reventon formula, and we've done our independent research, which is why we've found so much success with our clients, is they really trust what we say because we have great results. But more importantly to that, our third check and balance, which I think by far is the most important, is we invest where we tell our clients to invest. So we say invest where we invest. So in all these areas that we've actually highlighted now, almost all of our team members and myself own in these specific areas with the same builders, same developers, same land area people that we use to ensure that they're great investments. So not only do we do all the research and we say we believe in these areas, we put our money where our mouth is, which I think really stands us apart from the rest.
And I think, lastly, not to go over the same points a number of times, Chris, but what is really important is not only getting the data, following that, doing the research. What's been really important for us, and something that I've noted that we do is probably above and beyond a lot of other organizations, is we actually get out. Not only do we invest in those areas, but we actually get out on the ground. So just to give you a bit of an understanding, over the course of last week, as you'll be aware, but for our viewers to know, we spent a few days over in regional Victoria, in some areas that we're looking at in regional Victoria currently, where we believe we're going to see some good, again, as we spoke about, short, mid-term and long-term growth in those areas. And we really feel strongly about some of those regions that we've been able to look at. Over the course of last year, we spent a lot of time in WA. We were up in far north Queensland doing a lot of work in the sort of Townsville area.
Toowoomba.
Yep, Toowoomba, in those north suburbs of outer suburbs of Brisbane as well. We've done some extensive research there, been on the ground, not only myself as acquisitions, but also taken the whole sales team over there as well. We spent some time in South Australia last year as well. So all of these regions that we're researching and we're getting the data from, we're also going on the ground, having a look around, talking to locals, talking to local retails, to local
Inspecting
retailers.
the builders, the product, the property. So it's actually looking at the whole thing front to back. So when we recommend a builder, we want to actually see the quality of their stock as well. So it's one thing to do the research and to say this area is going to grow and take off. Zen and his team will then go down and research those areas extensively, speak to builders, walk through products that are finished or near completion, and actually go through that whole process. But as I said, it instills a lot of confidence in our clients when we're actually investing in these same processes and areas as well.
And I think something that often gets overlooked is amazing property managers. Okay, so meeting in the town with different property managers and getting a bit of an understanding to, okay, how come this property management company is managing 700 properties? Why is this property management company managing 200 properties? Getting a bit of an understanding towards the right property manager really sort of makes it a seamless process going forward. So looking at investments, what's really important is, again, obviously finding the right location, getting in at the right time in that location allows you to maximize the growth period, but also taking away some of that stress and headache. A great property manager can do that for you. So being on the ground and understanding who are the property managers that we want to work alongside with. I know here at Reventon, when we're talking about properties here in Victoria, we manage multiple properties here in Victoria, upwards of 700 properties here in Victoria. But also when we're talking about interstate, we've got some affiliations with organisations that we work with interstate as well.
So in a Brisbane-based company, but just to reiterate, because obviously we've got to stick on time as well, it's an additional team member. So you need to have a very strong team, which consists of a great mortgage broker, which consists of a great property manager, a great accountant. So it's a very important part, an integral member of your team.
And I think, again, there, understanding the importance of the end game. So understanding the importance of not having the time to be able to take away to deal with quotes on properties, things being fixed. So we not only sell new homes, Chris, we also do buyers advocacy. So we do a lot of work in the established space as well. So when you're looking at dwellings that have been there for a 5 or 10 year period, it's all good and well to talk about capital growth in locations and I suppose the boom in different areas and the timing, the market and things like that as well. But when you're looking at established homes, which I think may differ us from other organisations, you have to understand that if a product's been there for 10, 15, 20 years, you may foresee some problems with that. So again, building and pest inspections, hugely important when we're looking at purchasing for buyers advocacy and things like that as well. So understanding who the organisations that we want to work with and who is going to look after it in the back end to make it a more seamless exercise for our investors is a massive thing for us as well.
Now,
So,
just to lead into what we said, we're going to talk to you about some great locations and places to invest, but please don't invest without getting the right advice and ensuring that you are investing in the right products in the right areas with, more importantly, the right team behind you. But Zen?
Okay, so we will talk about a few of the locations that we have earmarked for 2024 and some of the areas where we believe we will conduct a number of transactions for our clients. So again, still working in that WA market, areas north and south of the river. There's a lot of government spending, obviously over 1,400 infrastructure projects large infrastructure projects into that WA area. Housing shortfall, 25,000 homes per annum in that area as well. The median house price continues to grow, especially homes below that $700,000 mark.
Affordability range, yeah.
Yep. And in Perth, you're still able to buy, and most of these areas, or all of these areas that we're talking about, that we're looking into in 2024, Chris, you can still buy neutrally and positively geared properties with, again, the right research, the right information, and making a solid decision on where you want to actually
Just
put
to
that money
touch in on
there
that
as well.
for our listeners that don't understand the difference. So negative and positively geared means that the property is giving you positive cash flow. So the rent is covering all the outgoings. Neutral means it's costing you neutral. It's not costing you anything. So due to the high rent yields, because of the demand and the shorting housing, we can actually attract really high rents in certain areas, which again is very, very specific to the Reventon formula we look at. Another area, Zen, which we've sold multiple properties and we're looking in the area is Queensland. Tell us a bit about Queensland.
So we've obviously done extensive work in Queensland over the course of the last sort of 2 to 3 years around the Brisbane and Gold Coast area. We've also headed into regional Queensland and far north Queensland, where we've seen some substantial growth in those areas as well. Again, significant government spending with the Inland Rail project as well. House prices have seen double-digit growth in some of those areas that we're speaking about as well, and it's been the fastest growth that the state has seen in a decade as well. So the Boeing facility up at the Wellcamp Airport in Toowoomba, again, another major infrastructure project there, and having a facility like that where Boeing are going into and actually building and constructing and repairing their planes says something about what's happening in that region there as well.
So obviously a lot of confidence there, a lot of money being spent there, which creates jobs and opportunity and other things. So moving forward, again, further states we've invested in.
And we will be looking at in 2024 is South Australia. South Australia has been a very steady and consistent state when we're talking about suburbs around the Adelaide area, mostly around that sort of North Adelaide area. There's over $560 million being spent on resources, the education sector, technology and agriculture. There's over 3,000 allotments to be released in those areas, so huge demand for housing in those northern areas as well, and over $3 billion in commercial development as well, Chris, with over $250 million being spent in health and medical facilities, again, which is one of the factors that underpins growth in those areas as well. So not to forget regional Victoria. As I was saying, last week we spent a couple of days in regional Victoria, having a chat to some different land developers over there, some different builders in the state, as well as some property managers in that state as well. So double-digit growth in those areas as well, Chris. So when we're looking at different locations and seeing that sort of growth, so almost doubling the national growth, these are the reasons to why spending some time doing the due diligence, getting the data, getting the research is hugely important. So vacancy rates, again, we want to look for vacancy rates below 1%. And in those regions, we're looking at population growth of over 20% in the course of the next 10 to 20 years as well. There's diverse employment opportunities with government and private spending as well. So again, as you were speaking about previously, Chris,
Yep.
a number of different factors as we, I suppose, do our research and talk to our clients about different areas that are suited, and understanding that everyone's circumstances may differ. So an opportunity to sit down, have a bit of a one-on-one discovery session, seeing what you can and what you can't do,
Yep.
whether it's your appetite for properties at that sort of $450,000 to $500,000 range, whether it's an appetite to build a portfolio over a short period of time, and again, your appetite to risk.
Change it depending on the person. But as we mentioned, we can talk real estate all day, but we want to keep it to around about the 30-minute mark. We look forward to seeing you next time as well. Thanks on behalf of myself and Zen. Have a great day.
Thanks. We look forward to seeing you next time.